Welcome back. I'm Pratap here. Today is 9th February 2024. Let us analyze the performance of high liquidity zones generated in our previous video. Even before that, a small announcement, please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available in the playlist Supply Demand Zone Price Action course. You can find this playlist at our channel, or even I am providing the link to this playlist in this YouTube video description. By clicking the link directly, you can get into this page. And once you get into the page, scroll down to the bottom of this page. There, starting from lesson 1.1, all the lessons are available in the order. Excuse me. So please go through all these lessons one by one and strengthen your knowledge related to supply demand zone price action. I have also provided a link to our Telegram channel in this YouTube video description, and please join in the Telegram channel. Before we release any video, we provide update in the Telegram channel. So this is about our free training program. Now let us get into analysis discussion. Yesterday we identified 1, 2, 3, 4, 5, 6 high liquidity zones related to daily time frame and 75 minutes time frame. Out of this, only one trade is executed and stop loss is triggered in that trade. And also we identified one zone will be violated. In advance we identified same thing happened because the structure is not good. Let us discuss these details in discussion. The first one is AU Bank. The stock is near the high liquidity demand zone. See, today the prices did not enter into this zone. The zone was created on 11th April. We have the leg in, then base candle, and 13th April we have the leg out. So we have a leg out with gap. Now currently the prices are in the pro gap area. So probably it may take some more time to get into this zone. So we have fine-tuned this zone. Let me show you how we fine-tuned. See, this information is fine-tuning the zone is a very important concept we discussed in lesson 16 zone confluence in our training lessons. And during that practical session I explained fine-tuning the zone is the most important concept because every day we are doing this activity. So that is the reason why every high liquidity zone I am showing you how I am fine-tuning. So that a similar way if you build if you get our experience, you will get more success related to the high liquidity zones. Because this is a daily zone, the immediate next zone is 75 minutes. Inside the daily, we have to identify a 75-minute zone. So that is what we identified in this stock. Let me zoom. See, here we have identified a drop, 2 base candles and a rally candle. So that way we have drawn this 75 minutes. Inside 75 minutes, we identified a 15-minute zone. So let me go to 15 minutes time frame. See here inside we identified a drop actually because of this gap, not able to see the candles properly. Now you see we have a drop, 2 base candles, and then we have a rally candle. Again within this 15 we identified a 5-minute zone. Here also Here we have a we have a rally candle, two base candles. See, whenever there is a with gap up, we have a leg out candles. Trading view visual representation is changing. See here, because of this huge gap, the scale size is increased and all these candles are actually looking like small base candles. But that is not true. That's why hide this gap, hide this candle. Then you will understand the real structure of this candle. See, I am hiding this leg out candle. The moment I hide this candle, we have a rally candle, two base candles. We have a rally candle and two base candles. See, clearly it is visible now. But now you see, the moment you are able to see the candle with gap, all this visual representation is changed. That's why you should be very careful. Especially when gaps are there, try to hide that candle having the gap. Now you will be able to get a proper structure. Now you can compare these candles with the previous candles. That's why we identified this as a rally candle. If you see like this, it is not easy to identify. We have a rally candle, two base candles. You can't identify. All these candles looks like base candles. So be careful. So this is the way we fine tune up to 5 minutes level, but we didn't get a trade today. Prices didn't enter into this zone. Now the next one is Bajaj Finance. This is also a daily high liquidity zone. Actually, Bajaj Finance is having a LOTL. We have a two high liquidity zones. Actually, this is LOTL for two high liquidity zones. The one below, whatever the zone we have drawn. What is the zone we have drawn? We have a rally, 1, 2, 3, 4 base candles, and with the hidden body we add, this is again a leg out candle. This zone we already identified previously. We also got few trades in this stock earlier. Now again what happened after that? Again a drop candle, base candle and a rally candle. Drop, base, rally. So this is the one we identified yesterday with the help of our software. Basically our software yesterday it filtered this demand zone because it is the nearest to the current price. So that's why we have fine-tuned both these zones. But today prices did not enter into this zone. How we fine-tuned went to the 75 minutes time frame. So inside this, the recent price action, drop, base, rally. There is a 75 minute zone. So inside this 75 minutes, again we identified a 15 minute zone. Actually, there is no 15 minute zone here. We have a drop candle. Again with hidden body, this is a rally candle. Between there is no candle. But even then, what I did, I skipped the 15 minutes zone. I went to the 5 minutes. Actually, we should not draw this. But why I have drawn? Let me tell you the reason. First, let me show you the drawn zone. We have a leg candle, medium size leg candle, drop candle, two base candles, and then we have a rally candle with the hidden body. If you add this entire hidden body, this is going to be a rally candle. Drop, base, rally. Here I have written this, I have drawn the 5-minute zone. Is there any use with this 5-minute zone? Actually, inside 75, 15 minutes should be there. Inside 15 minutes, 5 minutes should be there. That is the way we need to fine tune. But what I did, I bypassed the 15 minutes time frame. That means inside daily we have 75 minutes. Inside 75 minutes, by bypassing the 15 minutes, directly I have identified the 5 minutes. Mostly such kind of zones will be violated easily. If you want to take, even then if you want to take a trade in that zone, such kind of trades are called aggressive trades. If you want to go for aggressive trades, some price action clue should be there. What is the price action clue here? I have a pro gap is there in this area. Drop, 2 base candles and a rally candle is with pro gap. Because pro gap is there, that is one price action clue. And I have another price action clue also. That is rejections near to this zone. See here? Just before entering into this 5 minutes area, see how strong rejection from this area. This strong rejection indicates there is a strong order flow before this zone. Why there is a strong order flow? Because in this pro gap area, there is a real institutional pending orders are there, pro gap area. Next time, still some more pending orders will be there. Next time prices enter into this 5 minutes area, already 5 minutes area pending orders will be there. But this pro gap pending, pro gap, whatever the pending orders are there within the remaining pro gap area, those orders would consume the supply. By the time prices enter into the 5 minutes, the supply would be weakened. The moment supply is weakened, what happens? The pending orders in this 5 minutes demand zone push the price up. This is the way how we plan the trades. Here we have two advantages. Generally, one is enough for us. Either price action or clue rejection or the price action clue pro gap. One is sufficient, but this zone is having both the supports. Pro gap support as well as price rejection is an indication. So that is the reason why we planned this trade as an aggressive trade. But unfortunately today prices did not get into that area. We did not get a trade. So this is about Bajaj Finserv. So there is a huge distance for the prices to reach into this 5 minutes area. 5 minutes area. Next one is Ramco Cement. This is the one we got the trade and stopped out. But I am sure none of you would have placed an order in this Ramco. The reason is just during 5 minutes, the split of the first second itself, the prices were stopped out. That means before you place the order, the prices went down. I think Ramco Cement is having results today. That could be one reason why the prices moved down. Generally in the results area, mostly we don't take trades in that stock because unexpected moves will be there. If you look into the trading view, because this is a daily zone, first let me go to the daily time frame. See, here we have a drop, 3 base candles and a rally. This zone looks good, very good. Already once it is tested previously, prices went near to, first forget about the results. First let me tell you how I fine-tuned and why we are very positive about this zone. First let us discuss that. Inside this daily we identified a 75-minute zone. So we have a drop base candle and a rally candle. That way we can take. Or you can consider this one is a drop, these two candles you can consider as a base candles. Either one is valid. But anyway, this one I am feeling this is good enough to consider the leg candle and then base candle, just comparing this base candle and the previous candle. That way I am taking the decision. This is a clear leg out. So inside this area we need to fine tune. Why we are not fine tuning the one drop, 3 base candles and rally? Because this one is already executed previously. And after that this zone is violated. See here, previously once this zone is completely violated. So this is the one fresh zone. So inside this 75 minutes, we have to fine tune 15 minutes. So we have a very good 15-minute zone inside this 75 minutes. See, 75 minutes is inside daily. Now 15 minutes is, we have drop candle, 1, 2, 3, 4, 5, 6 candles, base candles and a rally candle, and then follow through candle. That way we can consider. Within this, that means almost the same 75 minutes area, 15 minutes is also occupied. That means the risk, if you want to take a trade on 15 minutes, the risk is very, very high. So obviously you need to plan for a 5-minute zone. So we have a clear 5-minute zone inside that. See, this is the candle. This looks like a base candle, but this is also considered as a ERC candle. The length is high, so this could be a leg candle. Then you have a base candle and then you have a rally candle. And previously, prices came near to this zone. It did not enter into the 5 minutes area. Let me show you. See here. Prices came previously very close to this 5 minutes area. And see the rejection after that. After that, next follow through candle, see how big move. That means there is a strong order flow in this area. Because there is a strong order flow, there are higher chances this 5-minute zone will work. But why it failed? Generally, previously also, few times I told you, if there are any important events, we should not plan trades on demand and supply zones. Because there is an important event, we don't know how institutions behave. They may cancel all their pending orders. And one such kind of event is results. It's not advisable to trade before the results day or on the results day. You can't expect the behavior of the price because the results will influence. The results may lead to adding a new order into the zone, new orders, or the results may lead to cancelling the existing orders in that zone. That is what happened today. Institutions might have cancelled all their pending orders in this zone. Maybe they anticipated the result is not good or result is not anticipated. See the big gap from compared to the yesterday. See, today 7% is down in this stock. Morning in the pre-open market itself, there is a huge fall. Pre-open market itself. That time itself I realized that this zone will be violated. And during when market is open, first second itself, prices came up to here. During the first second. That means before you might have placed, you entered your trigger on your order, itself the prices came before. That's why I'm sure none of you trades might have been executed or would not have placed. Before placing itself, prices would have come down. But still we need to consider this zone is for our statistics point of view, how many zones are failed. We need to monitor. Why we are monitoring in future, we will see why, reasons behind these failures. We have to do such kind of analysis in the future. We know the order flow is very strong. Still, why it is failed? So here for this particular stock, the reason is event. Important event, you should not place order. Demand and supply zones may not work properly on any if there is any event on that particular day. Events could be a results, or the event could be your RBI, the interest rates, or Fed interest rates, the US market, Fed interest rates, or elections, or budget day. These are all some of the examples for important events. On those events, do not place any orders. How do we know there is a result on this day? Because TradingView will display this E, earnings. E indicates earnings. So that's why it's better to not to take any trade on that particular zone. Anyway, we would not have placed, but still, if anybody might have put the order, how much loss they would have got, we have to calculate that. That way, Ramco Cement would have given 1,275 rupees loss, which is equivalent to 0.9 negative ROI. Because it is a loss, we get negative ROI. 0.9% minus 0.9%, which is close to 1%. Because we planned week to week, this particular type 1 proximal, the reason is the candle is very narrow. If there is no results today, probably it would have just reached this 5 minutes type 1 proximal and prices would have gone up today. Definitely, because we have a strong price action clue earlier. There was a strong rejection from this area. There could have been a strong pending orders. Apart from strong pending orders, this zone easily violated means institutions would have cancelled all their orders. The reason is there is an event, important event, that is results. So never trade any stock on the results day. That is quite dangerous. This is one example to learn what will happen if you trade on a results day. This is a classic example. This is one important learning for you from this analysis discussion. So this is about Ramco Cement. Now let us move on to the next stock, that is RBL Bank. RBL Bank is a daily high liquidity zone. We have a rally, base rally. Today prices did not enter into this zone. I have done a lot of fine tuning in this zone. First, let us look into the 75-minute zone inside this. We have a drop, base, rally. You can consider this as a rally ERC candle. Now again you can draw, again this is a rally candle, base candle, another rally candle. Again at the edge of this particular base, again you have a rally, base, rally. That way we got three 75-minute zones. These 75-minute zones again you need to fine tune to 15-minute zone. In that one of the zone is already tested, just want to show you. Here this one is already tested. Because it is already tested, you cannot plan a trade. So you have to delete this entire zone. Because we have to look for fresh zones. So the zones below this, we have the opportunities. Now let us see the structure of those zones. So here we have a drop candle, 1, 2, 3, 4, 5 base candles and a rally candle. This is the one. One, two, three, four, five base candles and a rally candle. Or you can also consider this entire candle is a ERC candle. Then 1, 2, 3 base candles. That way you can draw the zone. That is also possible. Either way you can draw, but I consider all these are all base candles and this is a leg candle. And this is the next so this is a drop. This is not really convincing because this is a ERC candle. And rally is also not great and follow through candle is also not great. But still why I have drawn is just to identify the 5 minutes area in this. Just a benefit of doubt, that's it, nothing more than that. And here we have rally, 2 base candles and a rally. That way we have another 15 minute zone. This is 115, this is another 15. Both these 15 minute zones are LOTL zones. And this is another 15 minute zone. Now go to the 5 minutes. Why we have to go to the 5 minutes? We know the real structure of the zones. See here, this is a very important, for especially from the stock. Earlier we thought by looking into the 75 minutes, we thought all these zones are fresh zones. But you go to the 5 minutes, you will find some of these zones are not at all fresh. 75 minutes time point of view, they looks like fresh zones. First we will fine tune to the 5 minutes time frame. So this is a rally candle, 2 base candles and a rally candle. But see, price is already tested this zone. When this zone is already tested, you cannot plan the trade second time. We don't know how strong it is going to be. You can plan second time when it is that is also high liquidity. We don't know that is a high liquidity zone or not. Is it tested? No. Only once it is tested. Second test is not good. See here, there is a rally candle. After that, there is another. This is also looking like base or ERC. Maybe you can consider this as a base. It's not as big as this candle. That means we have a leg out without follow through. After that, prices came and entered and tested this zone. Because it is tested, delete this. Just want to show you, that's why I kept all these things on the chart. How exactly you need to plan your trades. Now within this area, we have 2 zones, LOTL zones. We have a drop, 3 base candles and a rally. And prices came close to this zone, but they didn't enter inside. So we can say there is a order flow is there. Again, next time also it came. See the rejection from here. Maybe within this area some order flow is there. Let me draw a horizontal line. So by consuming this entire order, then it has to enter into this 5 minutes area. So before consuming all these pending orders within this area, your supply will be weakened. By the time supply really enters into this, prices really enter into this 5 minutes demand zone, your supply would have been weakened. Definitely the pending orders in this zone will push the prices up. So that way this is one good zone. Next one, there is below one more 5 minute zone, rally, 2 base candles and a rally. See, prices try to enter into this zone. See here, both these candles. There is a strong order flow in this just before this 5 minute zone. See, the close of this candle, the close of the next candle. So prices are not letting go below this. So that means this 5 minute zone is also very strong. In case if this first 5 minute zone is violated, definitely you can plan your trade in the next 5 minute zone. You will get success. If these two are failed, we have another option here in this drop base rally, the third. So this is the way we have three fresh 5-minute zones. They haven't tested. So these are your real order flow, real zones have, these are the zones having the real order flow. So one of these zones definitely will get success. So finally, if you zoom everything, all these three zones looks like a single zone. If the gap is very limited, you can keep if the risk is limited, you can take an entry in the first zone, and in the third zone you can keep the stop loss. That way you can plan your trade. If it is a cash trade, it will be easy for you. The advantage is you can position size. You can do position sizing. By position sizing, you can reduce the risk. You can limit the risk to only 2% level, maximum acceptable. Maybe F&O, it may not be possible. Position sizing may not be easy unless your capital is a huge capital, huge investment. And if you are buying some 10 lots of, or 15 lots or 20 lots in futures, at the time position sizing is possible. You are trading just one lot or two lots, position sizing is not possible in futures trades. But cash trade, yes, it is possible, position size. That way you can control your loss in case if anything happens against, because the risk is, when you combine these three, the risk will be high. Anyway, these strategies we will discuss during our training program once we enter into that chapter, position sizing. But anyway, if prices did not enter into this zone and we did not get a trade, next one is India Cement. We know this zone will be violated. This is a 75-minute zone. India Cements is a 75-minute zone. This is a drop base rally. See how easily the zone is violated, went down. After that, again, institutions created a new demand, drop base rally, and pushed the price. That is a different story. But the zone, we predicted the zone will be violated. That is what happened. Why? How we predicted? Because in the 15 minutes time frame, we didn't find proper price structure. Look into this 15 minutes. We have a rally candle, we have a base candle. Here we have a drop candle, ERC candle. This is supply. Again, the supply is violated here. Or you compare these two candles, we have a ERC candle, we have another ERC candle. Between them, there is no base candle. Here also, there is no base candle between these two leg candles. When there is no base candle, demand zone can't be identified at 15 minutes level. You may identify in 5 minutes, but we cannot do that. 5 minutes trade, if you take, that is an aggressive trade. Price action clues should be supported. Only in such kind of situation only you can plan. Such kind of situation may not come every time. Rarely we will get. Because we have such kind of price structure, we can tell easily this zone will be violated. See, we predicted this zone will be violated. Same thing happened today. Today this is the morning 9:30 candle. After the next 9:30 candle came very close to the digital line. Next candle prices came down. So easily the zone is violated. So that's why in India Cement we didn't plan any trade. And the next one is again a 75-minute zone, Astral. This is a short trade, 75 minutes, stocks near supply zone. Recently we got a trade in this zone. If anybody remembered, Astral, we got recently once we got a trade. Intraday we got. But see, those who have taken, uh, what to say, W80 trade or, because anyway, this is a 75-minute zone. Anybody would have taken a W80 trade. This would have been our target. Today prices came very close to this. So today prices did not enter into this zone. So it is a continuation to the previous, what to say, it is a continuation to the previous trade. Prices are moving. So Astral also we didn't get a trade. So this is about all the stocks near demand and supply zone from our previous report. I hope this information is useful to you. Let us all meet again in our next video. Thank you.